Hi everyone, welcome to issue number 2 of the Cryptocademy newsletter. My name is Justin Bennett, and in today's video, we're going to take a look at why Bitcoin dumps. I'm going to show you why it is not random, and then we're going to get into some charts. I'm going to try to keep this video shorter than the last one. I think it ran for about 14 minutes, and I want to keep these videos as short and digestible as possible. All right, so with that said, what you're looking at right here is the F2 pool outflows. F2 pool is a Bitcoin mining pool. They are one of the largest, and so naturally they tend to affect the price of Bitcoin. And what I mean by that is this line up here, all right, this black line, this is the price of Bitcoin. These red bars are the amount of outflow. So over here you can see where this is 500 Bitcoin, 1,000 Bitcoin, etc. Now, what you'll notice back here, this was the very top of Bitcoin's recent all-time high, just below $60,000. Now, what you'll notice here right off the bat is that we had this massive outflow from F2 pool right at the top. And this is an hourly chart. So each of these bars represents 1 hour. So this was literally within hours of the top of Bitcoin. And this right here was over 3,500 Bitcoin. And sure enough, as soon as that happened, we got the first sell-off within this correction. You can even see back here, look at this outflow right through here. And sure enough, we got another sell-off followed by another one. Now, a lot of people look at this and they say, okay, yeah, but even a few thousand Bitcoin might be a few $100 million. And that sounds like a lot, but Bitcoin can absorb that much selling pressure. And it can, however, what's happening, and this is where it gets a little bit more speculative, but if you look at the inflows from some of the exchanges that offer high leverage, like BitMEX and Kraken, all right, look at BitMEX. This was a 941 Bitcoin inflow within a single hour. All right, and again, it occurred right near a top. We had the inflow. Bitcoin then went from about $54,000 all the way down here toward $45,000. So that was a big drop, and this inflow occurred right near the top. So what do you think was happening with that 1,000 Bitcoin? Do you think it was just sitting there, or was it being leveraged into a short position? And again, as I said, it's a bit speculative, but my opinion on this is who has access to 1,000 Bitcoin, right? The only group that really has access to this kind of Bitcoin, and you can see it again back here, right? These inflows happen right through here, right before we got a drop. So that amount of Bitcoin though, who has access to that? And the first thing that comes to my mind are the miners, right? The miners have access to hundreds and even thousands of Bitcoin. And if you're not convinced by this, let's look at the Kraken inflow, which just today, within the last 24 hours, we got a huge inflow from Kraken. So in my opinion, this right here is part of the reason why we're seeing Bitcoin down about 4 or 5% today. Because this one inflow, this 1 hour, this was 7,676 Bitcoin. And again, the only groups that have access to that kind of Bitcoin are the miners. So I can't prove that it's F2 pool specifically, but it has to be a mining group, and it has to be one of the larger ones because, again, 7,600 Bitcoin is a massive amount of Bitcoin. So groups like F2 pool are the only ones that would have access to that kind of Bitcoin. And in looking through these charts too, one thing I've noticed is that the BTC tends to flow into exchanges that offer extremely high leverage. So what's happening is, even though $100 or $200 million doesn't sound like a lot, it's not enough to move Bitcoin. If you leverage that 30, 40, 50x, right? Like I believe that BitMEX offers 100x leverage. So if you take that $100 or $200 million, leverage it by 50x or 100x, all of a sudden you're talking about billions of dollars, and that can absolutely move Bitcoin, especially when you consider that if I move over to the Bitcoin chart and we look at this latest dump, this is the previous all-time high up here. All right, these guys who are doing this, they're not just dumping anywhere. They're waiting for the market to run up about 100% over a few weeks or even months, and then they're picking their moments to short. And the reason they do that is because they want to hit the liquidation prices on the way down. So longs that are in the market and leveraged, they have liquidation prices along the way. So if you're buying through here, you have liquidation prices below those buy orders. So when they short, not only are they using their money to short the market, but they know if they drive it low enough, they'll start hitting those liquidation prices on the way down. And that's exactly what happened on this candle, where liquidations were happening so fast that there was literally no bid to catch the market. So the bottom line here is these guys are smart. All right. They're whales with access to millions or even hundreds of millions of dollars. And they are not selling Bitcoin at random. Okay. They are waiting for these huge runs to occur before they short. Like back here, they waited for an over 100% rally to occur before they started to use that tactic where they were shorting the market. The same thing here, 100% rally. Then we got a correction, and this is where they're shorting. They're waiting until longs get over leveraged into positions, and then they use this tactic to short. Again, I can't prove it, but if you just look at the data, all of the data suggests that that's what's happening. So in summary, these miners are profiting three ways. They're profiting from the Bitcoin that they sell, and I have no problem with that. They're miners, they can take profit. The second way they profit is they short the market. So they have short positions on, they're shorting the market with the Bitcoin that they've mined. And the third way is that they're buying the bottoms. Now, again, I can't prove that, but obviously if these guys are controlling the market and they're making the lows and highs, they would be foolish not to buy back at the bottom because they know where the bottom's going to be. The bottom is whenever they stop selling. So love it or hate it, this is what's happening. Some could argue that it's good because it helps reset the market. But if it weren't happening, we would avoid a lot of those flash crashes where we get a 10% move within an hour. All right, so with that out of the way, I do want to get into some charts here because this video is getting a bit long already. So looking at the total market cap, this is really my barometer for what's happening with cryptos. You can see, I pointed this out on Twitter earlier, where you can see we have this channel that has been in place now for the last few months. Now, one thing that's missing from this chart, if you follow the pattern, okay, the one thing we're missing right now, look down here. We don't have a retest of this support level. Now, it doesn't mean that the crypto market is going to come down and retest this area. We could just move sideways over the next week or two and come down and retest this area through here. So this very well could be the bottom, okay? We could have put in the bottom already. And now we just need to kind of move sideways to come down and retest this area. Or again, we could get a sharp move lower today or tomorrow and retest this area and challenge that recent low. But either way, I do think that this correction has at least another week in it before we see that next leg higher within this channel. Now, keep in mind too, that there is no guarantee that this channel stays intact. For all we know, this could break down. We could break lower from support and head back to retest that $1 trillion area. But as of right now, the one thing I can say is that I do think we're either going to come down here and test this support level or at least move sideways and retest channel support before we start to see that push back toward the $1.5 trillion area. All right, so next up is Bitcoin. And I mentioned this on Twitter earlier, where the pair was weighing on this channel support right through here, right through $49,000. And you can see where this channel is really nicely tested over the last couple of weeks. All right, so it was weighing on $49,000 support and we got that break. I said that a breakdown was likely, and sure enough, we got that on this candle. Now the market is currently testing $47,500 support. It doesn't look that obvious from the 1 hour, but if we look at the 4 hour time frame, you can see where this region has been critical for Bitcoin for a while now. Resistance back here and support right now. So one of two things has to happen here. Either Bitcoin has to go up, take out this recent high, close back inside of this pattern in order to move higher again, or it's going to close below 47,500 and head toward the next key support area, which in my opinion is somewhere right around 4,500 to $45,000. Okay, so right down here. But it all hinges on $47,500. That is going to be the linchpin, and it's going to determine whether we go back toward $43,500 to $45,000 or we move higher within this channel and perhaps retest the $55,000 area. Next up is Ethereum, and this one is a little bit harder to identify. However, we have a huge channel here going back toward August. And this channel right now hints at a much deeper pullback. Now, I don't want to scare you and say that we are going to go lower and retest like $1,000. Just like the other charts I mentioned, we could just move sideways here above $1,400. And I don't normally draw a midpoint in these channels, but you can see where this purple line is basically the midpoint, the 50% of this channel. And you can see how on the daily time frame, it has served as support perfectly. You can also see where recently Ethereum came down, retested $1,400, and it's holding right now on the daily time frame. Resistance is up here around 1650. And the reason that 1650 is significant is if we look at the monthly time frame. All right, 1650 is the 50% of last month's range. Okay, so from the February low to the high, 1650 is the 50% mark of that range. So basically what I'm looking for here is 1400 has to hold, okay, as does this midpoint level right here. So if this area starts to break down and we get a daily close below it, Ethereum could be going back to $1,300, if not $1,200. Alternatively, if we do get a daily close above 1650, that's what it's going to take to extend the rally back toward 1800 and perhaps even retest $2,000 later this month. But right now we are in consolidation. This correction is not over. So be careful if you are trying to identify a bottom. So next up is VET, and that's VeChain's native token. If we look at the daily and weekly timeframes, you can see where this retest was right off of the 2018 trend line. All right, so this trend line has been intact now for a very long time, for a few years. You can see where it struggled to break out back here. It broke out, closed above it, and retested 3.5 cents as support. Now, looking at the intraday charts, all right, the 4-hour, you can see this area right here, and this is what I mentioned last time. This was support. This area right here was resistance. And so far, VET is holding above this area. Okay, so right around 4.7 cents, that's the upper level of the support region, but it could extend as low as 4.5 cents. So as long as VET stays above this area, it is back within this range between 4.5 cents and 6 cents. So we could see that push higher. Now, if we do close back below this support area, okay, that would put VET back inside of this range right here between 3.5 cents to 4.5 cent area. But ultimately, it goes without saying that we need to see VET close above 6 cents in order to move higher and enter price discovery. So essentially, one could say that everything through here is all just consolidation. That said, I still like the idea of buying dips. So all of these dips down here were, in my opinion, a buying opportunity. Same thing goes for anything through here. Even if you buy here and VET moves back inside this range and retest this support area again, this would also be a buying opportunity. And that's especially true for those who dollar cost average. So I wanted to talk about Aave today because you can see where after this huge run up, all right, this crypto is up massively over the last few months. You can see back here, it basically started at about $20 and it topped out over $500. So far, this pullback, even though it doesn't look like much, has actually been pretty aggressive. And that's not surprising considering the run up that we saw. So this pullback has been about 50%. And you can see where recently we do have a bull flag pattern that is developing. Now, at the moment, Aave is coming off of resistance. So to me, the buying opportunities, if you missed this area down here, if we do see another rotation lower from cryptos, and you can enter in around $250, and again, this is just my opinion, not financial advice, that would be the next key buying opportunity, in my opinion. So that's what I'm going to be watching for. And even if we get a move down toward these lows and a bounce from there, so right around $300, that also, in my opinion, would be an incredible buying opportunity because I do expect Aave to reach $500 again and also $1,000 and above later this year. And last but not least, we have Cardano ADA. And this is one that has had an incredible run recently. So you can see where we have this ascending channel. All right. And back here, it really went parabolic through this area, consolidated, went parabolic out of the top of this channel. And since that time, it is starting to look a little bit top heavy. It's been an incredible performer, but nothing goes in a straight line. So with that said, key support comes in right around 96 cents. All right, you can see where it was resistance back here and then support. And if that breaks, we could see a move back here toward this trend line, which is also very close to the top of that channel. And that area comes in right around 70 to 80 cents. And all of that would actually be a pretty normal pullback considering the performance it's had. So down here toward 96 or 97 cents, it would be about a 36% pullback. And if it comes down here into the 70 to 80 cent range, it would be about a 40 to 50% pullback. All right, so all of that's normal and healthy, especially when you consider that since December, Okay, Cardano has had a 1000% run. So even if it pulls back 50% from here, that would be perfectly normal given what it's done over the last few months. All right, you guys, so that's it for today. I hope this has helped. I apologize for the length of this video. So much for keeping it short. That didn't happen. But I hope this has helped you guys explain kind of why Bitcoin dumps and also give you an outlook on some of the charts I'm watching.